Hello, my name is Steve Bigelow with the Candlestick Forum. If you understand the psychology of candlestick patterns, you allow yourself to be much more mentally prepared and produce much more profitability in your trading by knowing what investor sentiment usually does. Where do most people sell? They sell at the bottom. What tells us we're in the oversold area? Stochastics. What happens when you're in a downtrend and you get to the oversold area? If you see it gap down or gap down like we saw today, you prepare yourself for a reversal where you start watching for buy signals. What's the psychology of that? Where do most people sell? They panic sell at the bottom. The question in our chat room was, why were people buying on news of the war? This is the old scenario of sell on rumor, buy on news. Or in an uptrend, you buy on rumors, sell on the news. The fact that they finally came out and decided they were starting a war, which was what everybody expected after selling off, that's when it gapped down and traded lower. You got ready to start taking profits if you were short, because that's where the reversals will occur. Same scenario in the NASDAQ. When they gap down in the oversold area, get ready for buying. When they gap down today and you started seeing it turn green, if you were short, that was a good time to start covering your short positions. So shorts like we had on Rublex, when it opened lower and started trading lower and then started coming back up in the oversold area, that told you to start taking profits. Or if it came up through the previous day's close, that was telling you the bulls are stepping in, take profits, and definitely take profits if it started trading up above the previous day's open. Same scenario on the upside. Where do most people buy? They buy exuberantly at the top. What shows exuberance? One, look how far away you'd moved from the T-line, and two, when they gap it up in the overbought condition. Very simple. If you aren't taking profits up here, put a safety stop at the previous day's close, because logic says if there's enough selling pressure to take it back down through that level, there's probably going to be some candlestick sell signal. So logical stop losses or profit taking. When they gap it down, take profits. When they come up through the previous day's close, take profits. Definitely take profits when you close or start trading above the previous day's open. Note where it closed today, a big bullish engulfing signal. I'll jump ahead here a little bit. We are going to be doing a candlestick mini spotlight training this Saturday. They supposed to be an hour. They usually go for an hour and a half, sometimes 2 hours. But not only are we looking at recognizing the signal, which isn't that difficult to do, it's more important to figure out where those signals are occurring as far as the trends and the other indicators that will improve the probabilities of that being a reversal signal. When would you be buying? What would be our confirmation? First of all, confirmation of a bullish signal is bullish trading. Secondly, notice how this one closed right at the T-line. If it opens positive, what's it telling you? One, the T-line's not acting as resistance anymore. And two, it's confirming your reversal signal. So remember, the T-line rule is very simple. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. So we're looking for the strongest signals if this market is reversing, like the kicker signal. Opens here, closes here, gaps up and goes the opposite direction, usually implies there's going to be a lot more upside. So if you've been reading the books, a lot of information in the candlestick books, come join us on Saturday, because this is what kind of enhances or expedites your learning process of learning the signals and then understanding where they work correctly. That'll be it. We'll see you in the chat rooms.